Hello and welcome to Business Incorporated. We see the trading day moving along, and definitely we're keeping our eyes on what the U.S. Fed is going to do today. But let's kick off with the markets that we track now. Start off with global oil. We'll see, edge down, pausing after recent sharp gains fueled by worries over a potential Russian supply disruption. So we're still seeing geopolitics there driving sentiment in the oil market. For the prices there, we see $68. 2 cents there. That's for Brent crude. And we see $64, about $64, $63.90. That's what WTI is trading was trading at last time we took that number there. But you know, definitely a lot of volatility in most of the markets that we track. Now let's get a check on what's playing out with the metals market. Definitely is red on the screen there. Pullbacks across board with the metals that we track. But we see spot silver still holding on there, $41.79 per ounce. But the biggest drop we see there with the metals that we track, 2.17 down for palladium at $1,174 per ounce. Spot gold, $3,699 after touching $3,007, still close to the highs there. But U.S. gold futures maintaining at $3,700, and definitely we see investors watching out for what's going to play out with the interest rates in the U.S. Most of the big economies are coming up, but most especially the dot plot. What's the U.S. Fed chair, that's Jerome Powell, what's he going to say about interest rates going forward and his worries about inflation? We're definitely looking out for that. But we see analysts at Deutsche Bank, they've raised their forecast for gold prices next year, saying that the recent surge that we saw to about 3.7, they expect to run to about $4,000 per ounce. Michael Sways lifted their 2026 outlook for gold. That's hitting $4,000 per troy ounce on average, up from the 3,007 already hit. So definitely quite a bullish expectation for gold prices coming from Deutsche Bank. We'll see if that hits at some point. We'll keep tracking all of that. Two other stories now. Artificial intelligence could overhaul global trade, boosting goods and services output by nearly 40% by 2040, and that's according to the World Trade Organization. The WTO projects global GDP could rise 12 to 13% as innovations in logistics, regulatory compliance, and communication that's slashing trade costs. However, it warns that without investment in digital infrastructure and inclusive policies, many low-income countries risk being left behind. That's from the WTO right there. All right, let's get a check on what's playing out in East Africa now. Uber, they're diving into Kenya's wildlife scene. The ride-hailing giant has launched Uber Safari, a new offering that lets users book guided day and night game drives in Nairobi National Park directly through his app. This move is to tap into Kenya's $4.3 billion tourism sector, boost income for safari operators, and redefine urban tourism for locals and visitors. And South Africa's annual consumer price inflation, that slowed to 3.3% in August, down from 3.5% in July. This marked the second highest level recorded this year, following last month's peak after a relatively calm start to the year. The statistics, South Africa released their latest figures today, noting that easing food and fuel costs helped cool headline inflation. I see the chief director for price statistics, Patrick Kelly, he provided more insights. Take a listen.
Annual consumer inflation eased in August, pulling back to 3.3% from 3.5% in July. Softer food and fuel prices helped take some of the pressure off the headline rate. We also saw a dip in monthly inflation. The consumer price index fell by 0.1% between July and August. Out of the 13 categories in the basket, 4 registered declines. These are food and non-alcoholic beverages, household furnishings and maintenance, transport, and information and communication. Let's take a look at food prices. Annual inflation for food and non-alcoholic beverages slowed to 5.2%, down from 5.7% the previous month. Within this, several categories eased, including cereals, seafood, dairy products, fruit and nuts, and vegetables. On the energy front, fuel inflation remained in negative territory at negative 5.7%, slightly lower than the negative 5.5% recorded in July. Inland motorists paid 28 cents less per litre for 95 octane petrol, a monthly drop of 1.3%. Diesel, however, rose 2.5% between July and August.
That was Patrick Kelly there, Chief Director for Price Statistics in South Africa, breaking down the latest inflation data there. I guess inflation, most of the central bankers seem to be winning that battle, at this point in most of the global economies. But let's get a check on how the markets are looking now. Nigeria's equities market opened on a cautious note today, with the all-share index slipping about 14 basis points, extending weakness from the previous session yesterday. Downturn was driven largely by heavy sell pressure in Ardell Holdings, which fell by 4.59% during the trade there, while other laggards include Cornerstone Insurance, Prestige Assurance, Wema Bank, and NASCON. We'll see 0.27% drop there for the intraday trade, and definitely a lot of volatility, so that could have changed, by now. Johannesburg Stock Exchange also down 0.32%, still holding on to the 104,000 level for the all-share index. Other markets we track in the sector there, we see EGX 30, that's up 0.19% at intraday. Then the Nairobi Stock Exchange, Tuesday close 0.54% down. We're still holding on 170 points there. All right, let's take it further now. Let's find out what to expect and what's been playing out in the Nairobi Stock Exchange. We have Jesse Ludenyo now, and he's the Chief Investment Officer with Gagen Bank, Addis Ababa, joining me via Zoom. Great to have you on the show.
Thank you for having me, Ladi. How are you?
I'm doing great. So, looking at most of the stock markets, indexes, they're mostly all flying high, at this time. And it seems the Nairobi Stock Exchange not left out of this party. Tell me what's it been like, the first half of 2025 on the exchange. What investors looking at? Who are the best performing stocks so far?
Well, Ladi, I think you got it right off from the beginning. It's a rather quintessential period in the market, particularly in East Africa and the Nairobi Stock Exchange. Just right off the statistics that we're getting from the academic front, we realize that for the first time in quite a long period of time, I'd say for the last 10 years, we're seeing very low correlation between earnings growth and share price performance across sub-Saharan African companies, and particularly East Africa. Which is raising the question whether brokers and investors are actually, doing analysis, or whether the information is actually flowing without any asymmetry from the companies to the investors. So it's a rather intriguing point of time in the markets. And like you said, the markets was 0.54% down as of yesterday on the all-share index, 0.73% down on the 20-share index. But largely, when you look at volumes traded, they're largely up. We have seen companies rising in share price in the first half of the year, oblivious of their financial performance. Top of the mark that we could probably take in note of has been the rally across the financial sector. When you look at it on a monthly perspective from August and July, we're seeing that rally across from the financial sector largely. This has been closely followed by the insurance sector and the manufacturing and allied sector. Ladi.
Right, and looking at what's playing out with the currency market and the economy in Kenya, are you seeing a correlation between what we're seeing with the stock market, so far?
Looking at the general macroeconomic factors, I think the cutting of interest rates by the Central Bank of Kenya has been rather key in trying to stimulate reallocation of portfolios towards the equity market. And that could possibly explain the reasons why we're seeing a general rise in prices, even though this is not actually backed up by fundamental analysis of the company. So when you look at the index doing all-time highs of 178, the all-share index, which is rather unique, we could largely explain that to the reduction of rates on the fixed income market. And another unique factor has been the fact that there has been a lot of portfolio reallocation, not just among the local fund managers, but also cutting across cutting across foreign fund managers. So what we have seen is that due to the portfolio reallocation, a lot of that has seen general rises month-on-month basis and also half year on half year basis. So foreign buys have largely taken the win in the month of August compared to July. In the first half of the year, we also saw a bit of sell-offs, but generally the foreign buys took over the win compared to the net sellers, and that explains that rally in the indexes.
All right, fantastic. Thank you so much for helping us paint a picture of what's playing out in the Nairobi Stock Exchange there. Thank you. That was Jesse Ludenyo, Chief Investment Officer with Gargan Bank, Addis Ababa. Thank you for coming on today.
Thank you. Thank you.
All right, now let's get a check on what's playing out in the U.S. These stock futures, there were a little change today as traders prepare for the much anticipated monetary policy decision and an even more important policy outlook from the Federal Reserve. That's coming up today. And we see the color on the screen there. Just marginal drops there for the futures markets. That's Dow Jones Industrial Average, S&P futures, and the tech-heavy NASDAQ there, about 9 basis points down. All right, let's get a check on Asia. See what's happening with Asia markets there. We're also seeing some kind of volatility, going on there. Hang Seng, that's 1.78% up. What's red for the close in the Nikkei and Kospi. They're a big 1.05% drop, and definitely we're expecting negotiations between Trump and Xi Jinping there. That's coming up Friday, so definitely investors will be looking out for that. Look at the Nifty 50 in India. I will see that that's for the better there, 330 points above 25,000 level, 0.36% up. You see the Shanghai Composite, 0.37%. So it's quite a good picture we have right there in Asia, but somewhat mixed. Well, let's head on to Europe now. See, there's latest estimates on power consumption in Germany, the EU, and other top economies there. But first off, let's get a check on how investors are bracing for the U.S. Fed decision in Europe. Great to have you, Lars.
Let's have a look at the market here, Ladi. Up on Monday, down on Tuesday, and then it's up again today. I mentioned yesterday, investors are buying when the market's down a bit, but they're immediately selling when there's an uptick. So there is still no conviction anywhere. Now, to be fair, we saw some heavier losses in the DAX yesterday, late yesterday, I should say, after bank shares dropped a bit in the late afternoon. So there was somewhat of an opportunity, indeed, for people to get in today. All eyes, of course, are on the Fed. That's true for German and European investors as well. And looking at latest moves here, some analysts actually say that especially yesterday's late losses were partially due to people being worried about the currently strong euro. That makes, of course, European exports more expensive. Well, if the Fed does indeed cut interest rates today, as everyone is pretty much expecting, that might weaken the dollar a bit. That would make, of course, the euro even stronger, and that doesn't really speak for much more gains. And talking about gains, just like I said, we saw some today, but just over the last minutes, they basically evaporated, and we're seeing markets pretty flat right now.
Yeah, definitely. We'll keep tracking to see how markets continue to react, but I'll be expecting some big volatility later on today. But a new report is out on energy consumption. How's it expected to go up, in Europe and other regions around the world? They're expecting, energy consumption will rise. What can you tell us about this?
Oh, definitely it's going to rise. And let's just start really with that one thing that all the regions in the world have in common. Their demand will be up, their demand for electricity. It will rise tremendously over the next 5 years and likely, of course, beyond that. But we're talking about a study here of the next 5 years. And we're looking at data and estimates that the Boston Consulting Group has researched. Now, what's really interesting, the 3 biggest economic areas in the world see their power demand rise for totally different reasons. In China, more electricity is apparently needed to power an ever-growing industrial sector here, pretty much the same in India, by the way. In the U.S., demand for electricity is going up to power these giant data centers. And Here in Europe, demand is set to rise to satisfy transportation needs, the rise of electric mobility and such. And that tells an interesting story, if not a very good one from the European perspective, because, Ladi, Europe is clearly not at the forefront right now of new technologies. That would clearly be the US, while it also doesn't have much growth in the industrial sector. That's exactly what we're seeing in China.
So what's behind these, developments, and why are they so different from each other?
Yeah, some of this is obviously sort of historic and very easy to explain. China, of course, is a massively rising economic powerhouse and still has a lot to build up. The US is obviously a high-tech force and very strong in data technology, in the data economy, also, of course, the leading force in AI, in artificial intelligence. But the fact that Europe doesn't see any of that, and that it sees mostly growth in a rather benign sector, of course, transportation, mobility, is also due to high energy prices here. Electricity is more expensive across the continent, and especially in Germany, than it is anywhere in the world. And over years now, it's led to much less money being invested here in energy-intensive businesses, even though they include, of course, some of the tech fields that are generally seen as future technologies and drivers even of growth and wealth. In Europe, investment in energy-intensive industries has only grown 20% over the last couple of years. In the US, it was 60%, and in China, a full 275%.
All right, definitely we'll keep tracking all of that, and we're getting into the December celebration there, so a lot of demand expected for electricity. Thank you so much, Lars Holter, for helping us break it down.
Thank you, Ladi.
Well, let's get a check on what's playing out in the crypto market now for this day that most investors are trying to make sense of what's going to happen going forward. But let's look at the color there, and yeah, just like yesterday, we see Bitcoin there carrying most of the green and many pockets of red at this point, showing that investors are trying to find direction, in this market at this point when we're waiting for that most expensive good afternoon coming from the U.S. There. But let's get a check on some of the top stories in the crypto market. I see Bitcoin exchange-traded products saw a surge in investor demand last week, recording a net inflows of about 20,685 Bitcoins, the biggest weekly intake since July 22nd, according to K33 research. The rebound pushed U.S. spot Bitcoin ETF total holdings to 1.32 million BTC, topping the previous record set at the end of July. Then we see Google, they're partnering with Coinbase. They're pushing further into the world of crypto with a new open source payments protocol that lets AI apps make and receive payments using stable coins in partnership with Coinbase, the Ethereum Foundation, and over 60 other companies. And the initiative aims to build secure, user-approved digital contracts for agents acting on behalf of users. Then we see a Bitcoin whale has risen from the dead after 12 years of long inactivity for that wallet there, and it moved 1,000 Bitcoins worth about $116 million, just hours before the U.S. Federal Reserve's key interest rate decision. So I'm sure investors wondering what's going to happen next. Blockchain data from Look On Chain shows the coins were originally acquired for roughly $847 each. That's about $847,000 in total before being held for over a decade and transferred to new wallets today. What's that whale trying to do? Is it trying to sell? We'll definitely find out. Let's bring in Lumide Additional, our financial market analyst. Hello, Lumide.
Good afternoon. Thanks
Fantastic.
for having me.
It's been a while, Lumide. Great to have you. And I'm wondering if you are that whale that's woken up after 12 years and moving Bitcoins around.
I hope so. I'll be a billionaire by now. But I think it's been a very exciting period for crypto investors, particularly this year. And while we're waiting for the very important interest rate decision for future guidance, I think we are also awaiting the US CPI data just to understand the macro conditions in the world's most powerful economy. However, I think the market has already priced strong rally, and we've seen Bitcoin ETFs appetite still quite healthy, but concerns still remain. The the technology utilization is lower than what a lot of people are looking at. Take a look at Swift. The bookmakers are betting that certain blockchains like XRP should be in place to take over. It seems that that's unlikely because there are bank positions where crypto companies like Ripple should have a bank charter license. So there's still infighting in between traditional and major digital companies. However, I think the proponents for Bitcoin hitting $200,000 in the next year might be unlikely because despite the fact the US Fed is bringing interest rates down, it shows that we are in an asset bubble phase where US stocks all-time high, crypto market all-time high, Nigerian stocks all-time high, while you look conversely at yields, tells you that a lot of trouble with unrealized losses in the US banking space at record high. You also look at the fact that there's high rate of unemployment in frontier and even in the United States recently. So gladly, different macros, different takes, but the reality is that Bitcoin seems powering on and getting the much needed liquidity to stay above $100,000.
Right, and everyone's bracing for the decision today coming up from the U.S. What's your advice for those trying to make that bet, either going long or going short on Bitcoin?
No, I think supported. You look at major currencies against the dollar, tells you that the decision definitely we're expecting a Fed cut 25 basis points. 50 basis points would be a surprise. 50 basis points would definitely take Bitcoin above the 120,000 mark. But I think rates are already kind of priced in, so we might see some volatility. But the long take is how the US economy behaves, particularly inflation data. We see an uptick and how the US Supreme Court interprets Lisa Cook, the Fed governor that was being dismissed by President Trump, how it takes because of interference. So the dollar has really supported the crypto market. Dollar is down 10%. Any retraction, any change in that definitely will hamper Bitcoin's future rise. But it's not my take to bet against a moving train, Ladi.
You heard it from Olympic. They don't bet against a moving train. But, definitely we'll also be looking at how Stephen Myron's going to vote today. I guess maybe a no-brainer. He'll vote for a cut.
Definitely. The bookmakers are putting that he will be in line with the president that appointed him. Yeah.
Right. Definitely. And, they're trying to find out how independent he would be, serving in that seat there. But, generally, I guess whatever happens today, all we care about is what the U.S. Fed chair is going to say about interest rates going forward.
Exactly. And that's why traders are not interested in the headline data, that mean the interest rate decision. They really want to know the outlook because you look at the U.S. employment data, you look at inflation, it tells you that the U.S. economy is distorting from the normal.
All right, so much to unpack there, but definitely we'll be watching, we're keeping our eyes on close to see what he does and what he says with our ears. Thank you so much, Lumide Additional, financial market analyst.
Thank you for having me.
Yeah, so there you have it. Then next week, we are going to have our own decision. That's when it comes to interest rates. We'll get that from the MPC, and we'll be covering that live on Channels Television. We should get the decision, I think, by Tuesday next week. So we're also bracing for that, investors right here in Nigeria. Thanks for watching Business Incorporated. That's how most of the markets we track are looking. We'll bring you more updates tomorrow. Thank you for watching. I'm Ladi Williams. Bye for now.